Welcome back, everyone, to another episode of IvanVentures, your beginner-friendly podcast all about finance, investing, and business made simple. I'm Ivan, and today we're kicking off a powerful new 4-part series, something we've been wanting to do for a while. We're going to dig deep into how Gen Z and Millennials are completely, and I mean completely, rewriting the rules of investing.
And I'm Mella, and trust me on this is not your parents' investing strategy anymore. Not even close. We're talking crypto, AI stocks, even dividend side hustles, and those day trading apps everyone's on. Younger investors are just flipping the script on what it even means to build wealth.
They really are. But before we dive in, we have to start with the most fundamental question, right? What exactly are young investors buying in 2025? The answers, well, they might surprise you. And understanding them is really the first step to building your own smarter investing strategy, no matter your age.
Okay, so let's start with the big picture, the why behind all this. I mean, think about it. We have commission free trading apps, we have fractional shares, we have 24/7 market access. Gen Z and millennials have easier access to the stock market than literally any generation in history.
Right. The barrier to entry is just gone. You can start with $5 on your phone while you're waiting for coffee. It's a different world, and they're using that access in some really bold new ways.
Totally. And the data backs it up. So, according to a recent Motley Fool survey, something like 45% of Gen Z investors own growth stocks. US stocks are close behind. Millennials are pretty similar, but we lean a little more toward the broad US equities, the S&P 500 funds, that kind of thing.
Here's the twist, and this is where it gets interesting. Younger investors, so us, are almost 3 times more likely to hold speculative stocks. We're talking penny stocks, meme stock, the stuff that makes the news, than baby boomers are.
Oh, for sure. And it's not just stocks. Crypto related equities, blockchain focused companies, they are way more common in our portfolios. It's a huge generational shift from like play it safe with blue chips to take calculated swings for the fences.
And I think calculated is the key word there because it's easy to look at that and say, oh, they're just gambling. But that's not the whole story. While they do take more risks, most young investors still say they prioritize long term gains over short term hype. It's a balance.
Exactly. It's like, okay, 90% of my portfolio is sensible, but I'm going to take this 10% and shoot for the moon.
And we get it, right? We've been there. In fact, full disclosure, here's a little confession. You remember this, Mella, back during the big SPAC craze a couple years ago?
Oh, how could I forget? The SPAC craze. Yes. What was it?
Both of us, Mella and I, we bought into Virgin Galactic, ticker SPCE.
Oh, yeah, I remember that. It was so exciting. I mean, space tourism, commercial rockets, the future of travel, it all just sounded way too revolutionary to miss out on. It felt like getting in on the ground floor of, well, space.
It really did. And at the time, SPACs, these special purpose acquisition companies, they felt like the next big thing, this new, faster way to get innovative companies onto the stock market. And even though it was super speculative, and spoiler alert, it didn't exactly make us rich, it taught us a crucial lesson. Speculative investing isn't about betting the farm. It's about understanding your own risk tolerance and keeping those kinds of plays as a small, manageable part of a diversified portfolio.
That's the key. That's why so many Gen Z investors have what you might call a handful of moonshot stocks in their portfolio, whether it's a space company or a tiny biotech startup or some early stage AI firm. The idea isn't guaranteed profit. It's about participating in potential big trend breakthroughs. It's almost like a ticket to the game.
Yeah, a lottery ticket with slightly better odds, maybe. Okay, so let's zoom out a bit. Beyond just individual stock types, what sectors are young investors really gravitating toward in 2025? Where's the money flowing?
Well, no surprise here. Technology is king, absolutely dominant. Over half of Gen Z and millennial investors hold tech stocks. We're talking the big names everyone knows, right? Apple, Nvidia, Tesla, Microsoft, the companies leading the charge in AI, cloud computing, and chip innovation.
Because it's what we use every day. It makes sense. Okay, what's second on the list?
Well, financials, which might surprise some people. Roughly a third of young investors hold bank stocks, payment platforms, or those fintech innovators like PayPal and Block, the company formerly known as Square.
And then there's a really fast growing trend, AI related stocks. I mean, it's the buzzword of the decade. The data shows around 21 to 22% of younger investors now hold AI focused companies. That's a huge jump from just a few years ago.
It's massive. And here's where things really, really diverge by age. Gen Z and millennials are way more likely to invest in crypto related companies, nearly 3 times more than boomers. But older investors, they tend to dominate in the more defensive sectors. Think energy, utilities, healthcare, the slow and steady stuff.
Which makes total sense if you think about it. Younger investors have, hopefully decades ahead of them to ride out the volatility. So we're naturally drawn to innovative, high growth sectors. Older investors, on the other hand, they tend to prioritize stability and income as to get closer to retirement. Different goals, different strategies. And Mella, there are a couple of other huge drivers here that we haven't even touched on yet, and they're almost exclusively a phenomenon of this generation.
Okay, speaking of knowing your stuff, it's time for a quick quiz. Let's see how sharp our listeners are. You ready, Ivan?
I'm ready. Let's do it.
All right. Question one. Which sector is held by over 50% of every single generation from Gen Z to baby boomers?
Hmm. Okay.
Question two. Who's more likely to own crypto related stocks? Gen Z or baby boomers?
That feels like a softball after what we just said.
Maybe. And number three. True or false? Gen Z and millennials show similar enthusiasm for REITs, that's real estate investment trust.
Okay. Interesting. Answers will be coming up after the next segment, so don't you dare Google it yet. Next, let's talk about risk. How do younger investors actually feel about risk? Because interestingly, most of them see stocks as the least risky investment class, which is, historically interesting. But what comes next is even wilder. The second least risky, according to them, is, wait for it, cryptocurrency.
That's the one that always gets me. It might sound completely surprising to, well, anyone over 40, but it just shows how familiarity shapes perception. Gen Z literally grew up with crypto in their vocabulary. For them, Bitcoin isn't some exotic, strange idea. It's just part of the investing landscape.
It's native to them. It's like us trying to explain dial up internet to a teenager. Now, here's another interesting shift, real estate. Younger investors actually view it as slightly less risky than older generations do.
Right. And that's partly because of the rise of things like fractional real estate investing platforms and REITs, which we mentioned in the quiz. They make real estate so much more accessible than the old way of, saving up $100,000 for a down payment.
Exactly. You can own a piece of an apartment building for $100 now. And then what about the classics, ETFs and index funds?
They remain firmly middle of the road. They're seen as neither too risky nor too conservative. They're the sensible shoes of the investing world. And that's why they're so often the core of a portfolio, with those riskier, more exciting plays layered on top.
All right, the moment of truth has arrived. Time for the trivia answers. Mella, do the honors.
Okay, answer to number one. The sector held by over 50% of every generation is technology. It's the number one sector across the board.
Universal, love it. Okay.
Number two, the easy one. Who's more likely to own crypto stocks? Gen Z and millennials by a very, very wide margin.
No shocker there. And the last one?
And number three, true or false about REITs? The answer is true. Both groups, Gen Z and millennials, hold REITs at about the same level, around 23%. So if you got all three right, you're officially part of the finance feline fan club.
A very exclusive club. Okay, so we've thrown a ton of information at you. How do you actually use all this? One simple way I'd like to think about it is to structure your portfolio in three buckets.
Okay, I like buckets. Break it down.
Bucket number one is your core holdings. This is the foundation. Broad market ETFs, index funds, maybe some big, stable, large cap companies. This is the boring but essential part.
The veggies on your dinner plate.
Exactly. Bucket two is growth and innovation. This is where you put your AI stocks, your tech disruptors, emerging sectors you believe in. This is for your long term growth.
That's the protein, the good stuff.
And then bucket three, this is your speculative place. This is the smallest bucket. Small allocations to SPACs, penny stocks, or crypto related companies, like our Virgin Galactic example. This is the dessert.
I love that analogy. This whole approach gives you balance. Your core, the veggies, gives you stability. Your growth bucket, the protein, fuels your long-term upside. And your speculative sleeve, dessert, gives you that potential for those outsized returns without risking your whole meal.
Perfectly said. And remember, everyone, the goal isn't just to copy what everyone else is doing. It's to understand the landscape, see what the trends are, and then make informed choices that fit your own personal goals, your timeline, and your risk tolerance.
So, to wrap up this episode, we explored the what, the stocks, the sectors, and the risk profiles that are really defining the 2025 portfolios of Gen Z and millennial investors. But believe us, we are just getting started on this.
That's right. Next episode, we're going to tackle the why, specifically how younger investors are transforming dividend investing into a legitimate side hustle and what you can learn from it. It's passive income, but with a whole new twist.
You don't want to miss that one. Make sure you subscribe, share this episode with a friend who's just getting started, and hey, drop us a comment with your most speculative stock pick. We really want to hear those moonshot stories.
Thanks for tuning in to IvanVentures. We hope you enjoyed this episode. Until next time, keep learning, keep growing, and keep building the life and business you deserve.
And now for the important bit. This show is for educational and entertainment purposes only and should not be considered financial advice. Always do your own research and consult with a licensed financial professional before making any investment decisions.